Let's talk about the global economy in 2026. What if the biggest story isn't about simple growth, but about a massive split? We're going to dive into some expert forecasts that paint a picture of a world not moving in lockstep, but actually being pulled in completely different directions. And this quote from JP Morgan, it absolutely nails it. They call it a multi-dimensional polarization. We're calling it the Great Divergence, a world where the big, flashy numbers you see on the news are actually hiding the real story, which is an economy splitting into very clear winners and losers.
On the surface, everything looks fine. Goldman Sachs is forecasting global GDP growth at a pretty solid 2.8% for 2026. But honestly, that number is a bit of a mask. Because underneath it, there's this powerful economic drama unfolding, and it's creating some deep, deep divisions that are literally reshaping our world.
Okay, so here's our game plan. We'll start by unpacking this idea of a great divergence. Then, we'll get into the AI supercycle and its massive thirst for energy. After that, we'll look at a wild split in commodities, the divide between different countries' economies, and finally, we'll wrap up with what all of this really means for us.
All right, let's jump right into the core idea here, this great divergence. This isn't your typical boom or bust cycle. No, this is more like a fundamental rewiring of the economy driven by these huge megatrends that are creating a world of haves and have-nots on a global scale.
So what does this actually look like? Well, it's that massive, growing gap between the red-hot AI economy and, well, pretty much everything else. It's the US economy just supercharged by all this tech investment, pulling away from everyone else. And it's watching something like gold soar to new heights, while a staple like oil faces a huge glut. The main thing to get is that 2.8% number we saw. It's hiding all of this drama.
Okay, first up, let's talk about the single most powerful engine of this split, the AI supercycle. And look, this is way more than just another tech trend. This thing is a force of nature that's totally reshaping the markets from the top down. The momentum we're seeing is just incredible. JP Morgan points out that this AI boom is fueling record-breaking capital spending. It's projected to drive S&P 500 earnings growth up to a massive 13 to 15%. So this isn't just hype, it is translating into real, enormous profits. This slide just perfectly captures what Fidelity is calling a narrow bull market. Just look at the difference here. The standard S&P 500, the one you always hear about, is dominated by a few AI giants and is up a staggering 91% since late 2022. But if you look at the equal-weighted version, where every company gets the same slice of the pie, the gain is a much more modest 52%. This just shows you how concentrated this boom really is, and it creates a situation where the health of the entire market is kind of resting on the shoulders of just a handful of companies.
And hey, don't think this is just a US story. Over in Japan, new policies being called Sinonomics are pushing corporations to finally unlock the massive piles of cash they've been hoarding for decades. And what's the goal? To pour that money into investment and higher wages, all aimed at boosting Japan's own tech and strategic industries. It's just another sign that this tech-driven shift is a total game changer everywhere.
But this relentless AI expansion has a massive appetite. It has a critical dependency that's now creating the next great divergence. And this one is all about energy.
So let me ask you a question. What's the biggest bottleneck for the next phase of AI? Is it a lack of smart people? Not enough computer chips? The real answer might actually surprise you.
Energy. Plain and simple. NVIDIA's own CEO has said it. The main thing holding back AI's growth isn't computer chips anymore. It's energy. The amount of power needed to run these enormous AI data centers is just absolutely staggering.
And this incredible demand for power has kicked off what a lot of people are calling a nuclear renaissance. Why nuclear? Because AI data centers need constant, reliable, clean power, what experts call baseload power. So now, you have tech giants like Amazon and Google signing these huge long-term deals to build or bring back nuclear power plants, and that's creating a massive split between these next-gen energy sources and the old guard.
And the key piece of tech making this happen is something called a small modular reactor, or SMR. The easiest way to think about them is like compact factory-built nuclear plants. They're designed to power one specific client, like a massive off-grid data center. It's a huge move toward localized, super-dense power that's basically tailor-made for the AI revolution.
This whole divergence theme is also ripping right through the commodities market. It's not one big story. Instead, it's really a tale of two completely opposite trends happening at the exact same time.
I mean, just look at this contrast from the World Bank. It's wild. For 2026, Brent crude oil prices are forecasted to actually fall by 10%. But at the same time, gold prices are expected to keep climbing another 5%, and that's on top of already hitting record highs. So how can two huge commodities be on such different paths?
Well, it all comes down to completely different forces pushing and pulling them. The oil market is staring down the barrel of a potential supply glut, with production expected to just dwarf demand. A big reason for that is slowing consumption in places like China as electric vehicles really take off. Meanwhile, gold is in a totally different universe. You've got geopolitical uncertainty everywhere, and central banks are trying to move away from the US dollar, which is fueling this massive demand for gold as a safe haven asset.
Now, this divergence isn't just happening between stocks or commodities. We're seeing it play out between entire countries and economic regions, and there's one clear leader that's starting to pull away from the pack.
This table just makes the split crystal clear. The US is forecast to grow somewhere between 2.2 and 2.6%, which is significantly faster than the Eurozone or Japan. And the main reason for that? You guessed it. A massive boom in AI infrastructure investment plus supportive government policy. It's creating this powerful tailwind that other developed economies, which are grappling with their own issues, just can't seem to match right now.
So, what do we do with all this? How do we make sense of this increasingly polarized world? Let's try to boil it all down to the key takeaways from this great divergence.
When you connect all the dots, a really clear picture starts to form. The AI revolution isn't just one story among many. It's the engine that's driving all the other splits. It's what's pulling the stock market apart. Its incredible thirst for power is creating a new divide in the energy sector, and its concentration in the United States is what's allowing the US economy to pull ahead. All of these divergences really trace back to that one single powerful force.
So here's the crucial point, the real bottom line. Looking at the averages, like that 2.8% global growth number, just isn't enough anymore. To really get what's going on, you have to look under the hood at these powerful competing forces. The old playbooks for understanding the economy, they're quickly becoming obsolete.
And that leaves us with one final big question. In a world where everything seems to be splitting in two, markets, economies, commodities, what fundamental trend is going to be the next to break apart? What's the next great divergence on the horizon? That's really the question to keep in mind as we head towards 2026.